talking about the equilibrium, how you can use that into your trading, and I'll also be talking about the GU trade which we took, and it was an L. But yeah, you learn from it anyway. So alright, so let's go into the video. So alright, before we actually get into equilibrium, equilibrium is when supply and demand is equal. So let me give you guys an example. So this is our supply and this is our demand. Alright, equilibrium is 0.5% fib of that level. Right, simple as. How can we use that to advantage? So what actually happens, right? Whenever price breaks, let me use this actually. Whenever price breaks to the upside, either the supply or demand. So in this case, we'll be talking about supply. The price breaks the supply zone. Price starts rejecting whenever there's a break of structure, price rejects. And what we expect is price to hold the 0.5 level. You guys understand? And the price moving higher. What can we expect around this area is accumulation on lower time frame or order mitigation, which we were talking about. The price comes there and literally rejects. So our take profit should be around here. So what is happening here? Price is making to the upside, which is the uptrend, literally coming into the 0.5 and pushing to the upside. I'll give you another example. So price is breaking to the downside. Price comes. This is our lower low. Here, starts moving down. Take profit should be here. Then let the small position run if you want, depending on the trading style. Alright, so let's look into a downtrend. Anything, doesn't really matter. This is a downtrend, right? This is our area of supply and area of demand. Alright, what we want is price to break to the upside or downside. Obviously, since it's a downtrend, price broken to the demand, the downside. Making this a new area of demand. Right. So we look at previous areas. So it comes, look at these two areas, and we enter on the 50% of the fib. Alright, which is our equilibrium level, which we can expect price to push downside from. A good confirmation is when a price coming back to retrace, we want this structure to break to the upside, and then around 0.5 fib, we should be looking for distribution, then entering. You guys understand? So another example could be here, price breaking to the downside, right? We only take a trade when price does this. So new demand zone, low comes here. We're only gonna enter if price is broken the previous demand zone to the upside. If it's down here, then we do not enter. Comes near the 0.5 fib and we enter. You guys understand that? This is our upside trend. Alright, cool. So this is our supply, demand. Supply gets broken. makes a new higher high. This is the previous area of demand. So what we want price to do is come around 0.5 fib only after this area is broken. I have a confirmation for looking shorts. If this area has not broken, this is not a valid break of structure. I'll wait for this area to broken to the downside, then look for entries. So another example would be only this. Another example would be after this got broken out. Yeah, 50 fib is around here. So yeah, I'll be waiting for this entry run here. Let's look into this GU. Okay. This is a low, high, low, high. Since we're looking, let's look in the 15 minutes. Looks more clear. This is the area of demand. So let's supply. Supply has not been broken, so we're still on the downside. And I should have kept that in consideration. I was hoping there's liquidity on top of these levels, so I'm expecting that to break since we've taken the liquidity from the downside. Hence, I wanted this to hold. If this area did hold, we would have broken to the upside around here. But since it didn't, as higher time frame will have more confirmation than lower time frames. So what actually happened is, on a lower time frame, price was making higher highs over here. But what I didn't realize was the previous supply and demand zone, which is a lower low to a lower high, lies a fib, and there's a sweet little order block here. What price does, it already rejects it. First time, comes here again, grabs the small little bit of liquidity from the top and then pushes to the downside. This is the area we should be looking for shorts, realistically, on a lower distribution here. Should be looking for something like this here, stop loss around here, and then running this to like all the way down. But obviously my views were wrong, and then price came lower again. You need to realize this. Whenever price makes a new low, right, we need the previous price to come to the previous area and then push to the downside. So this is a break of structure, since this lower low is getting broken up here, and then we can look for entries over here for shorts. I would be looking around here, this area, but price never came to here since there was already orders mitigated over here, and price moves downside. Yeah, so this this is the similar trade to this one, but since price respected this area and holding it, we can still see price coming here. It will reject around this area, but I can see price coming around here, breaking this lower high. And then when this lower high is broken, this is a confirmation that price could shift to the upside. But that's if this holds. But yeah, it's just a sad trade we took. Or we move. Also, 4-hour time frame, you can look at this. Price is moving to the downside. So lower low, then we expect price coming back to this lower low around here, pushing to the downside if it wants to go down.